Hello, this is Christina Sparks with Coldwell Banker out in Missouri. Today we're going to talk about loan types and some of the things that go with those loan types, such as are gifts allowed, the maximum number of amount of concessions you can have, minimum credit score, down payment, all the things. In the description below, I'm going to include a link to a PDF, a document that shows all of these and more and answers all these questions. So it's a good quick reference guide that gives you all the loan information types that you need. All right, without further ado, let's get started. We're also going to be talking about whether or not these loans allow gifts. Now, gifts are considered, you receive money from a family member or whatever, but it's a gift, it's not a loan, and you are allowed to use those gifts as a part of your down payment, your closing costs, whatever needs to be paid. There are some loans that allow gifts and there are some that do not allow gifts. So we'll go over that too. All right, so the first one we're going to talk about is going to be FHA. This loan is very common. A minimum down payment you have to have for an FHA loan is 3.5%. Are you allowed to receive gifts to assist with this down payment? Yes. There are maximum loan amounts as well. These are Missouri numbers. The market is different in every state, so keep in mind this is Missouri information. Minimum credit score, 580. Yeah, 580. All right, maximum seller credit. This is considered what we call seller concessions, where the seller is paying for part of the buyer's fees. So the maximum amount a buyer can receive from a seller at closing for closing costs, buying points, whatever the case may be, the maximum amount is 6%. So keep that in mind whenever you're asking for concessions, because if you ask for too much and you get to the closing table, that money essentially does not go to you because you've already hit your max. So one thing to note with an FHA loan is PMI will be a part of that loan for the life of the loan, unless it's refinanced or paid off. PMI is private mortgage insurance, which is an additional fee that's tacked onto a loan because your loan is over the 80% loan to value threshold. So a couple benefits with an FHA loan, they allow a higher debt to income ratio. So if you have more debt, this could be a better option for you. There are no income limits with an FHA loan. You can make $1 million a year and still be able to obtain an FHA loan. You just have to stay under that maximum loan allowance. And another benefit is you can have a non-occupying cosigner. They have to be alive, but they do not have to occupy the house. All right, moving on to conventional. These are basic conventional loans. These are not originated with the government. Okay, so for a conventional loan, the minimum down payment is 5%, but gifts are allowed. So if you have a very nice auntie that wants to give you 5%, you can have that happen. Minimum credit score, 620. Maximum seller credit, 3%. That's it. So the only way that you would have PMI on a conventional loan, private mortgage insurance, if your loan to value ratio is 80% or above. If you owe more than 80% of what the home is worth, you will have PMI. The good news with a conventional loan is once you go under that 80%, you can call your bank and have that removed, that PMI removed, unlike FHA. Moving right along, VA loans. VA loans are only for veterans. The minimum down payment for a VA loan is 0. Thank you for serving our country. You don't have to put any money down on a house. Are gifts allowed? Yes. Although you don't have to put any money down, you can, and it can be a gift. Minimum credit score of 580, just like FHA. The maximum seller credit you can get is 4%. So in this scenario, since this loan allows gifts and they still are able to get concessions, say the buyer needs more than 4% for their closing costs, their funding fee, etc. If they need more than 4%, they can get a gift and they can pay for that extra cost that they need to at closing. So a benefit of a VA loan, aside from the 580 credit score, the 0% down, you also do not have any PMI. private mortgage insurance. Doesn't matter if you finance 100% or 70%. You do not have to pay PMI. Moving right along, USDA is a government loan, and USDA also has area restrictions. Like here in the Springfield area, you cannot buy a house USDA that is inside Springfield city limits. Has to be outside of city limits. But anyways, the minimum down payment for a USDA loan is 0%. Are you allowed to receive gifts? Yes. The minimum credit score is 600. The maximum seller credit is 6%, meaning you can ask for up to 6% in closing costs, whatever you need from the seller. With USDA, there are income limits. So you have to be within a bracket to be able to qualify for this loan. So those are the most common loan types, government and conventional loan types. Hopefully that was informational a little bit. If you have any further questions, of course, you can always reach out to me via text, email. I did include at the bottom or at the top of the description the PDF link, so it'll take you directly to a PDF. There's no sign up or anything. You can quick reference the loans I've talked about today and several others. This is also a partnered quick reference sheet, so if you are needing a lender, there is a lender. Her information is at the bottom. I hope this helped. I hope you learned something. Feel free to let me know if you have any questions, and have a great day.